Hey everyone, welcome back to Corporate Decoder. Today we are diving into Pagaya Technology's latest annual report, and let me tell you, it's a wild ride. We're going to unpack the numbers, the risks, and what it all really means for this AI-powered lending company. So stick around, it is going to get interesting and maybe a little bit scary. First things first, Pagaya is all about using fancy AI or artificial intelligence to shake up the lending world. They work with banks and other financial folks, helping them make smarter decisions about who gets loans. Think of it as a high-tech matchmaker between lenders and borrowers. They also do a bit of single-family rental thing, managing properties with their AI. One thing that Pagaya did recently was to do a reverse share split. Basically, they squished their shares together. For every 12 shares you used to own, now you own one. It makes the stock price look bigger, but it doesn't actually change the value of your investment. Also, there was an ordinary share offering which brought in about $90 million. They also issued a bunch of exchangeable senior notes to the tune of $160 million. These are like fancy IOUs that can be swapped for stock later on. Pagaya used this cash to pay off other debts and just have a little extra lying around. Pagaya acquired a company called Theorem. They bought it for about $17.5 million in cash and stock. As the transaction has closed recently, the purchase accounting has not yet been completed. Now, Pagaya is an Israeli company. On October 7, 2023, all of a sudden war broke out in Israel, which is not something they anticipated. It's been an ongoing conflict, and Pagaya says it hasn't really hurt their business much yet. Still, they admit it could be bad news down the road. Let's break down some of the lingo. ABS, that's asset-backed securitizations. Basically a bunch of loans bundled together and sold off to investors. Adjusted EBITDA, fancy talk for profit, but with a bunch of expenses and adjustments taken out. Now, let's get into some key financial numbers. The aggregate market value of the voting Class A ordinary shares by non-affiliates of the registrant as of June 30, 2024, the last business day of the registrant's most recently completed second fiscal quarter, was $49,915.21. This number matters because it shows what the market thinks the company is worth, at least the part that's available for regular investors to buy and sell. Next, we look at how they're making money. Most of their revenue comes from something called network AI fees and other contract fees, network AI fees, or artificial intelligence, which is what they use to find potential investments from partners. Fees come when the assets are acquired by financing vehicles. Multiple funding channels are utilized to enable the purchase of network assets from our partners, such as asset-backed securitizations. Now let's hit the numbers. Their total revenue was $1,032.02 million in 2024, which is up 27% compared to 2023. Sounds great, but it gets a bit murky. They had a massive net loss attributable to shareholders, clocking in at $401.2023. Looks like it's not all sunshine and roses. They have production costs, which basically means what it costs them to bring in all that income. Looking into the key expenses, we see that production costs increased by $88.7 million or 17%. That is not good because it means it's more expensive to bring home the bacon than it used to be. They also mentioned they are heavily dependent on their AI and they had to increase their investment in it in order to refine it. Other expenses increased dramatically from $56.7 million to $487.9 million, mostly from something called a credit-related impairment loss, which is the financial term for our investments didn't do so well and we had to write them down, which has to do with how well a given loan is. Now, this stuff is complicated and it can make even professional analysts scratch their heads. Now comes the part where Pagaya lists all the things that could go wrong, and boy, is it a long list. It's like they're trying to scare away investors. They talk about not managing growth effectively, not being able to make their AI technology better, trouble attracting new partners, and even the possibility of cyber attacks. They also worry about how the economy will perform. Interest rates, inflation, war, and natural disasters are just a few things that could throw a wrench in their plans. Pagaya has a big chunk of their operations in Israel, and if things get worse there, it could cause some serious headaches. One huge risk is regulators clamping down on their use of AI. If the CFPB or other agencies decide that Pagaya's algorithms are unfair or biased, they could be in big trouble. This could lead to lawsuits, fines, and a whole lot of bad press. It all boils down to this: if their AI goes haywire, or the market tanks, or the government starts cracking down, Pagaya could be in for a world of hurt. They acknowledge an increasing degree of media coverage that is published or otherwise disseminated by third parties, including blogs, articles, message boards, and social and other media. Being a foreign company has some perks, like not having to follow Inauth's same rules as American companies, but Pagaya could lose that status, which would mean more costs and more headaches. Overall, Pagaya is saying that it's up to the company's board to decide any payout type now. Let's zoom out and get the big picture here. Pagaya is an interesting company with a lot of potential. Their AI technology could really change the lending game, but a huge net loss is not a good sign. If they can keep growing, keep attracting partners, and keep those loans performing well, then they might just be onto something. But there are a lot of things that could go wrong, from economic downturns to regulatory crackdowns. Pagaya really needs to rein in those costs and maybe tone down the risk. If they can do that, they might just turn those losses into profits and start building some real value. This may not be a financial advice, so do your own diligence. Alright, that's it for today's Corporate Decoder. If you enjoyed this deep dive into Pagaya's financial report, be sure to like, comment and subscribe. Let me know what companies you want me to review next. Thanks for watching.